Now, oil prices have also rebounded from their 12-year lows after dropping below $27 a barrel on Wednesday, the lowest level since 2003. Both U.S. crude and international Brent futures have been surging. You can see there, U.S. WTI crude trading. It traded above $30 briefly before dropping back a little bit. There's both benchmarks still up more than 5 points, though. The low oil prices have also pushed the Russian currency to another all-time low, the second day in a row. The ruble was down by more than 4% earlier. At one point, a single U.S. dollar could buy more than 85 rubles. Now, the oil slide has been a hot topic at the World Economic Forum in Davos, where our team has been speaking to the head of Crescent Petroleum. That's the oldest private oil and gas company in the Middle East. Our business editor, Stephen Carroll, asked what the UAE-based firm expects for the near and medium-term future.
I think in the short term, we see potentially even more oversupply with Iran coming on, although the U.S. is declining now. The impact of such low oil price will impact the U.S., but how far and how fast is the real question that nobody really knows. I think it will recover for sure. How quickly it takes and to what level, I don't think we'll be seeing $100 oil for many years, but I think there are expectations we could be back at 40, 50 as soon as next year.
And how has your company coped with this oil price lump? We've seen many of the big oil companies cutting thousands of jobs, cancelling billions of dollars of projects. How has it affected you?
So in the Middle East, which is our key areas of focus, countries like Iraq and Egypt and the UAE, which is our home base, the cost of production isn't really the issue. We have the lowest cost of production for petroleum in the world. Our challenges tend to be above the ground. Regulations, bureaucracy, state domination of management of economic enterprise, respect for contract with some countries, in particular payments, which are either slow or not forthcoming, particularly with the strain on government budgets, and of course security. So managing these is where we, as a regional private sector player, feel we have an edge. Outside investors see the region as risks, and there certainly are risks, but being able to manage those risks can lead to reward.
And you say that low oil prices provide an opportunity for the Middle East. How do you mean? I
think that's right. I think when we look back, we've seen that waves of positive economic reform and change in our region only seem to come when oil prices are low, unfortunately. The last big wave was in the 90s when oil reached $9, and I remember that. We were screening projects at $6 oil, so 30, relatively speaking, is still higher than what we had then. And necessity is the mother of invention. I mean, that's when governments really have to focus that they can't continue to just hire people in the public sector and spend from state coffers. And you're seeing serious announced reform plans in Saudi Arabia, in Iran, in Egypt, regardless of the politics and the tensions geopolitically. All are suffering from the same fundamental economic issues. Massive youth unemployment, the highest rate in the world and the fastest rising, over 30%. Fiscal deficits approaching 15%. Low growth, the IMF says it's down to 2.5%, which is way too low to meet this challenge that we have of this youth bulge across the region. So the time for concerted economic reform is now, and in particular, creating a private sector-led economic growth.
That was our business editor, Stephen Carroll, speaking to the head of Crescent Petroleum in Davos. Now let's take a look at some of the day's other business.